Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investors. With me today is John Whitefoot with another exciting income pick. Real estate investment trusts, or REITs for short, like today's income pick, Armour Residential REIT Inc., traded on New York Stock Exchange under symbol ARR, have been facing pressure since March 2022. And why is that? The 11 interest rate hikes since then, from near zero to a range of between 5.25% and 5.5%, make it more expensive to borrow and carry loans. And this has a direct impact on operating margins and companies' bottom line or profitability. But the Fed held its lending rate in early November, and it's expected to do the same in December as well. As for 2024, analysts think that the first 25-point rate cut could come in as early as March, followed by as many as 5 additional rate cuts. Additional rate cuts will extend into 2025 as the U.S. economy slows down. John?
Yeah, and right now, Wall Street sees the Federal Reserve rate at about 3.83% at the end of 2024 and 2.83% at the end of 25, and that's well below the current federal fund rate of 5.33%.
And we've already seen how just the notion that the Fed is done raising rates is having on REITs since it announced a rate pause on November 1st. A cut to rates in early 2024, followed by additional rate cuts over the next 2 years, would only help juice the bottom lines of beaten down real estate investment trusts. So, John, coming back, what can you tell us about Armour Residential REIT?
Yeah, thanks. Well, it's all pretty much in their name, to be honest. Armour Residential REIT is a REIT that primarily invests in residential mortgage-backed securities that are issued and guaranteed by U.S. government-sponsored enterprises. Now, the REIT also invests in interest-only securities, U.S. Treasury securities, and money market instruments. Armour Residential REIT investments are primarily fixed rate. I think it accounts for like 98.7% of its portfolio. The company essentially raises capital through the issuance of debt and then reinvests its capital in higher yielding debt instruments. And it returns the vast majority of that money to investors in the form of share buybacks and stable ultra high yield monthly dividends.
What can you tell us about their monthly dividend?
Well, since its inception in November 2009, Armour Residential Stock has paid out approximately, I think it's $2 billion in dividends. Armour Residential REIT previously announced its monthly cash dividend of 40 cents per share. And that works out to a current yield of, it's pretty massive, 25.4%. If you look at the company's chart, it might look like it hiked its monthly payout by 300% in August. But that big jump was a result of a 1-for-5 reverse stock split, which was completed on September 29th, 2023.
Something worth mentioning is that Armour Residential REIT also creates value for shareholders through its share buyback plan.
Going back to 2013, Armour Residential has returned more than $282 million to common shareholders through share repurchases. Most recently, in the second quarter, it repurchased 425,000 shares at a net cost of $4.88 per share. And in the third quarter, the company's board authorized an increase in the current stock repurchase program to an aggregate of 2.5 million shares. Now, the company is able to provide investors with a reliable high-yield dividend and aggregate share repurchase program because it makes a lot of money. In the third quarter, it reported net income of $3.6 million and distributable earnings of $50.2 million, or $1.08 per share.
How has ARR stock responded to the Fed's November rate pause?
Well, if you look at the company's chart, preferably in our article at incomeinvestors.com, you'll see the immediate impact of the Fed's policy announcement on November 1st. Armour Residential stock actually ripped higher in the opening days of the month, and it has actually continued to build on those gains. As of this recording, Armour Residential stock is trading around $18.50, and that's up roughly 30% since the start of November. And it has actually rallied 18% over the last 4 weeks. And despite the big gains, ARR stock is still trading well below its book value of $25.53 per share.
John, thank you so much for your analysis. Just to recap, Armour Residential REIT Inc. is a great mortgage REIT that has seen its share price rebound since start of November 2023. The outlook for Armour Residential stock and its dividend remains solid, with Fed expected to hold its key interest rates steady and pivot to cutting rates in 2024. All of this should help improve its profitability, juice its share price, and hopefully allow it to raise its monthly high-yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special reports on our top 3 dividend stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with another video soon, so stay tuned. In the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.